Today we focus on a trade that I call the Mike Tyson trade. What Mike indicated is that everybody has a plan until they get punched in the mouth. So I think you'll find this trade useful to help managing your funds relative to trading in Tesla's stock and its options. This is great for Teslafaninsight. If you're getting this show in the first week, you're a Patreon supporter. We want to thank you for your support. It is greatly appreciated and makes a huge difference. We also want to thank those of you who do see it. If you're a Patreon supporter or not, please take time to like and subscribe. So we had an interesting situation happen on Monday, the 1st of June 2020, which is that Tesla had a terrific day, up $63. If you're trading options, one has to be very cautious with Tesla because strange things happen where the stock goes way up and goes down. And so an intelligent plan is to anticipatorily have set up what you're going to do in different situations. One of the things that can pop up is that there may be a plan that you had about how you're going to do things, and then you get punched in the mouth, and suddenly you have to figure out what the new plan is going to be. So I wanted to review this because in real time, as I was a part of the trade, I was fascinated by some of the things that occurred and the reasons why. So what basically happened is that I was sitting with call options on Tesla at 70, and actually I had sold out of some of my 70 calls because I'd made good money on them, or in this case it was 870 calls. And so I was trying to figure out, well, what do I do right now after selling those calls for a nice profit? The answer that came up was, why don't I buy some puts at 875 while the stock was, let's say, at 881, 82. And the objective was to let the stock kind of pull back to about 75, and then I could buy calls over the top. And so I kind of saw this happen one time, and I kind of missed it and didn't execute it. The first time it went from 880 back down to 872, and I was thinking, oh, no problem, it'll do the usual what Tesla does, which is the stock price tends to rise, and then it'll have a nice little pullback. Then you can do different things. So in theory, the basic idea is you could, in theory, buy the stock, ride it up, or buy the option, ride it up 20 points. Then buy puts on it right at that point, ride it back down by 10 points, then ride it back up another 10 points. So the net is you capture about 50 points worth of movement in one day, which actually is awesome, very lucrative, etc. So what ended up happening that was very strange is that Tesla went to 880, then 884, then it pulled back down to about, let's call it 877. So a very strange thing started happening. I'm waiting for it to go to 75. It's sitting at 77, and what started happening was something that's called buying the dip. So basically, the stock kept going up to around 883, dropping back down to 875, or excuse me, 883, 877, 883, 877, 883, 877. So I keep waiting for it to go to 75, and it refused. So I surrendered. And I was telling a trading buddy of mine that what I actually think was going on was you could actually see that there were certain people that were what's called buying the dip. And you could wait all day for it to bounce back to 75, where he had puts and I had some hedging puts against a position that I had. And so what ended up happening is that I concluded that, hey, these guys are buying the dip. Anytime it gets to 77/78, it's not going any further because there are a lot of people who need to be in this stock, and they're planning on buying every time that dip comes up. And so they know we're waiting for 875 So they're buying at 877 and not going to allow it to get there. So here's what I ended up doing, which is I actually bought 880 calls at that point once it got to 879. So I didn't wait for the full dip to occur. And I'm glad I did, because obviously the stock closed basically at 900 yesterday, up 20 points from there, and a nice gain on the option. I thought this was an interesting zone because we thought we were going to get the normal movement of Tesla. And I believe that from here into earnings slash the S&P decision, we're going to get Tesla action that we haven't seen before. So the plan that you and I may have had for how to trade Tesla profitably kind of got punched in the mouth. And so the question mark is, do you come up with a new plan, or do you kind of try to roll the old plan? Because that punch in the mouth is a sign that the environment has changed, and you can kind of change with the environment or try to battle it. And in general, fighting the market tends to be not very lucrative and unprofitable in the case of Tesla in particular. So even though I was a part of the trade yesterday, as I look back on it, I was fascinated because I was thinking, wow, how can Tesla go from being what it was on Friday in terms of a very limited range stock to now being a very high range stock? And there's a lot of answers to that question. Clearly, perhaps the SpaceX, there was some influence relative to the success of that project. But, there is actually the upgrade that occurred on Friday. And I believe that there are a lot of people trying to figure out how to plan and play the entry into the S&P. There's a number that keeps popping up, which is about a 20% move related to S&P entrance. And Elon definitely knows that this is the case, and he's aggressively managing the company to get into the S&P and have everyone, including shareholders and himself, benefiting from the increased value of the stock price that might happen by its entry into the S&P. A percentage number is about 20% that I've been able to deduce that one should see from around now in the next week or so, all the way to when S&P announcement is made. So if you can afford to hang in there with puts or calls just after the earnings announcement, or as we approach it further out to allow the S&P action to take place, I think this is probably one of the most important 3 or 4 weeks of the life of Tesla, because having a market cap 20% higher than where it is now puts it at $1,100 to $1,200 a share, which is pretty awesome for everybody involved on the shareholder side. So the goal of this conversation in the Mike Tyson trade was that I wanted to introduce the fact that there are a number of things that can occur, and being receptive to what might occur is a good idea because it can really help in your trading. Kind of a reverse Mike Tyson, I would call in this case, is that if the stock price is falling, there's actually some rules regarding how stock prices fall, and I've actually gotten snagged on this myself. Maybe not so much with Tesla, but a little bit with Tesla, but a little bit with others. And that is that you'll see a stock sort of plateau for a while, and then it'll go up. Or as it's going down, it'll plateau or go slightly up and then go down. There's actually something called the Uptick Rule. And I'm not positive that it's still in place, but I've seen it happening a lot. And what that is that it turns out that you can't short a stock heavily unless there's an uptick in the value. So we've seen Tesla do these moves where it's on the way down. It'll do an uptick of 3 or 4 points, and you're thinking, oh great, it's stabilizing here and will move higher. But instead it ends up being a temporary opportunity for people to jump out of the stock, forcing it down further and causing this on maybe every $10 increment, a slight uptick. You think everything's fine, it's about to go back up, and it just goes further down. So this is not a bad thing to note, as well as you're looking at the type, I call it maybe a reverse Mike Tyson, because it's on the way down rather than on the way up that we're seeing. The other thing I wanted to note is that I felt like as we watched the stock yesterday, I was very surprised to see it sort of consolidating at 877, as was everybody else in our trading group, because it had never been there before. So how could it be consolidating at a number that was above, what it's been trading at for the last 3 months? So I believe that it kind of caught myself and everybody else a little bit by surprise because it hadn't been seen, at that price point in a while. Consolidating that quickly at such a high number seemed strange. I was blessed to be able to sort of see this and trade it well. My sort of co-friend, who's a trader as well, had some puts. He was smart of him to sort of get out of those puts as the stock kept chugging north. Um, but it really kind of highlighted the fact that as you're trading, you really have to kind of have a bunch of tools in the basket. And I don't know if you ski, but one of the funny things about skiing is when you get on the skis, there's all these different levels you get to in your skiing. One of them is you always have to you want your body tucked and forward on your skis. And I always found it interesting that one of the transitions in skiing that occurred was learning how to let your feet feel the snow and then ride to where it takes you, as opposed to keeping everything rigid. And every time you hit a bump, the whole bump goes through your body and it's painful. So sort of letting your feet, comfortably ride across the snow is a possibility for better skiing. And I think in this case, you, there's also the issue of, yeah, we all want to make money. Yes, there's process to how to make that money out of Tesla. And I think part of that process is learning how to ride the ski slope that is all stocks, including Tesla. And I think the Mike Tyson punch in the mouth plan is a legitimate trade idea, because if you do get punched in the mouth in one technique, you want to be ready to adjust to another technique that allows you to make money as opposed to lose it. So, we'll call it the Mike Tyson. I thought about the reverse blitzkrieg. There are a bunch of other names. If you have any suggestions in that regard, we're open and look forward to your suggestion. So, what we're estimating right now for Tesla is that, it was suggested that by one of the folks that if Tesla got to 913, it kind of makes a run to 940 from there. I believe we've sort of outrun the upgrades for most of the analysts by this price point. And now we're kind of sitting on that fence of upgrade, good feeling, possible a short squeeze that we've sort of jumped into. And I think a nice, 10, 20 point pop today would really highlight the fact that, yeah, we've entered that special zone for Tesla above 900 and everybody's making good money. But we're also going to put the hedge funds in a tight squeeze position where they're going to have to figure out how to stop the train from moving or go out of business. And I would not be averse to seeing some dirty tricks. Hence, I like carrying puts in case things turn around dramatically. We saw that with Mr. Heinhorn previously. And those dirty tricks designed to lower prices. So you want to make more money by not having puts, but having them could feel real good if, in fact, you get kind of punched in the mouth, if you will, with an activity expectation that's unknown, be it the marketplace or the president or the hedge funds getting creative to accomplish this. So we look forward to getting your opinion on this Mike Tyson trade. And I want to thank you for again being a Patreon supporter. Please take time to like and subscribe. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitro, Hebrew, Hoda Hafez, Farsi, Hey Do, Swedish, Strasvice, Russian, Ni Hao Ma, Chinese. Have a great day. Bye for now. And thanks for joining us. We look forward to your comments.
And robots. So it's like this giant cybernetic collective. So that was way harder than making the car by far. And I mean, it's worth noting, like, the last time, at least in the US, the last time any car company achieved mass manufacturing was about 100 years ago. That is the last time, and then Tesla. It's literally that crazy. So, the issue is definitely not coming up with a car design. It is absolutely all about building the production system. You want to have a good product to build, but that's basically the easy part. Then the factory is the hard part. Then the challenge is like, okay, if we create a car factory, where the heck are the batteries and electric motors and power electronics going to come from? And that's where we need to say, okay, we better build something that's capable of 50 gigawatt hours at least of cell output, which at the time when we proposed the Gigafactory, I believe like total global output of lithium-ion batteries for all purposes, phones, laptops, certainly cars, anything, was about 30 gigawatt hours. So we're like, okay, well, just do the basic math. We need 50 gigawatt hours. So we better have a real big factory, or there's no way. So, we were going to build it in California, but like it would have taken 2 years just to get the permits. So we built the Gigafactory in the amount of time it would have taken to get the permits in California. That's what the Gigafactory looked like in 2010. It was basically rocks and bushes, okay? And now this is what it looks like now. Yeah. So, and it's only about a third complete. So this one complete, I think it's about 4 or 5 times the size of the Pentagon. So it's kind of difficult to appreciate scale, but that thing, although it's really quite tall, it's like 70 feet tall. So the volume of it is just mind-blowing. I love you too. I love you too. We are bringing sexy back quite literally. All right, thank you.